everyone, and welcome to a special Token Metrics webinar. I'm your host, Nancy Chen, and today we're going to talk about how to build a crypto portfolio. This webinar is for educational purposes only, so please keep in mind that the items discussed today should not be considered financial advice. That said, we do have a full and exciting agenda. Thank you to all those that submitted questions in advance. We selected a few and we will answer them during the last segment. We also have a surprise. For the next 24 hours, you can get a 40% discount on any Token Metrics plan. Just use the code GOTM40 during checkout. And yes, we do accept crypto as payment. So let's dive in with our first speaker, Jad Hajali. Jad is a quantitative analyst and the host of TMTV's Quant Insights, and he is here today to talk about how to build a winning crypto portfolio using Token Metrics. Welcome, Jad.
Hi, Nancy. Thank you for the intro. And hi, everyone. Hope everyone's doing well. So like Nancy said, my name is Jad. I'm the quantitative analyst at Token Metrics. So basically, I've been working on developing the TM grade, developing the Token Metrics Indices that I will show in a little bit. So for today, I'm just going to show our platform, the website. I'm going to go through some of the features we have and how you can use them and leverage them to build a profitable portfolio and to trade cryptocurrencies with good risk management and all. So that being said, let me start off with a tour of our platform and website. All right, so here is where you sign in to tokenmetrics.com. This is the homepage. It's the ratings page here. So on our platform, we are currently grading using our TM grade, proprietary TM grade, which was built using quantitative trading methods like momentum strategies, as well as mean reverting strategies with the help of our machine learning and AI engineers to make it as robust as possible. So when you sign into Token Metrics, you would go into the ratings page where you would be able to see our TM grade here, which is essentially a metric that helps you understand how bullish or bearish our system or our AI and machine learning models are on a specific coin. So as of today, for example, the top rated coin is Solana, and it's been like this for the past 3 or 4 days. And then you can go through all the top rated coins. And whenever you see a grade that is from our tests and back tests, a grade above 75 or 80, it usually is a good indicator to open a long position. And whenever you see a grade below the 40, it's usually a good indicator to sell out of your position or even sometimes go short. So when you sign in, you log into that page, you can see all the coins we have in our system and you can see their TM grade. Yeah, and a nice feature we also have is that since not everyone has access to all the different exchanges, you can filter by exchange. For example, if I am a crypto trader and I only have an account on Binance, I can click here and filter out all of our tokens based on TM grade that only trade on Binance. So in that case, I will have all the coins that are ranked for the Binance. So I can start trading on Binance based on the TM grade. Another feature is we also have these sector specific. So if I want to trade only DeFi tokens, I can click on the DeFi sector and then it will give me all the coins that are in DeFi ranked by TM grade. For example, as of the past few days, the best rated coin in DeFi has been Maple with a grade of 90.75. All right, now before I move into the other features we have on our website, I just want to go a bit deeper in the TM grade and explain to you guys how is a good way to use it, leverage it to make more money in crypto. All right, so the TM grade is being updated every single day, like I said, based on our machine learning and AI models. So here's a good example, a good visual on how that TM grade works. So here in this specific plot, we have a Solana price chart. The price is in red on this axis right here. And then the TM grade, the time series of the TM grade is the blue curve here on this axis right here. So the TM grade goes from 0 as extremely bearish all the way up to 100 as extremely bullish. And this visual shows you how this TM grade works. For example, you can see that at this time here, our TM grade was extremely high for Solana, where it was trading around $30 or so. And it remained very high all the way up to the top. And we can also see that recently, for the past week or so, we also had a very high TM grade for Solana, around $100 or so. So that's just one example visually on how this TM grade changes with time and with prices. And now another example is Binance Coin, where also, as you can see here, TM grade was extremely high throughout the entire time, where it was initially trading around $20 or $30 all the way up to $600. And then you can see how the TM grade immediately went down at around 580, signifying a shift from a bullish momentum to a bearish momentum. So these are just a few examples visually on how this TM grade works. Now, if we want to go on more recent data and what has been going on for the past week, this table, I'm showing 5 coins that had a very good TM grade as of March 24th, so exactly 1 week ago. So Zilliqa, for example, had a very high grade, 86 grade on the 24th. And the ROI up to today has been 282%. And as you can see, this TM grade works well for large cap coins like VeChain or Zilliqa, but also smaller cap coins. So that's just an example of the performance over the past week of very high graded coins and how they performed all the way up to today.
Yeah, just
now,
to add
let's
on
look.
Jad's point, just to add on Jad's point. So we had a coin called Waves. So Waves had a couple of catalysts that none of the people in the market knew about. So there were 2 things that were happening with Wave. Firstly, it became EVM compatible, and secondly, because of the Ukraine-Russian crisis, people were using Wave as similar tool as Terra Luna. And none of the people in the market knew about it, but our AI was able to catch it through price momentum and different matrices. So maybe Jad just highlight that how it was far superior than, let's say, human analysts picking it up.
Yes, exactly. So during that time, actually, in beginning of March, we started seeing waves popping up in our token metrics indices, which I will show you guys in a little bit and explain what are the token metrics indices. But essentially, we started seeing waves at $12 being picked up in our portfolios because it had a very high TM grade, while the rest of the market wasn't doing that well. So based purely on the TM grade, we were able to flag waves at $12, and it was being picked consistently in our portfolios all the way up to very recently. Waves is a good example, as well as Zcash, which also started popping up in our indices at around $130 or $140 and was held all the way up to $190. So just to show you guys more recent examples of how the TM grade works, this is Ishi, a coin that's been performing extremely well in recent times. And as you can see here, TM grade also in blue and price is in red. You can see that the TM grade was in the very high 80s when the coin was still trading below $20. So if you were just looking at that coin, you were interested in it, and you went on our website and you saw that at any time here that, oh, look, this coin has extremely high TM grade, so it might be a good time to buy. And later on, the price actually did show that it was a very good time to buy Ishi at this point. Another more recent example is Zilliqa, where, as you can see, we had a TM grade of around 86 when Zilliqa was trading at 0.048. And it's been extremely high, the TM grade, all the way up to today, where it's trading at around 18 cents. So that's a good example of recent performances of these coins. And as I said earlier, it doesn't only work for the big coins, but also coins like Ishi and things like that. And this TM grade is not based on fundamental research or code reviews and things like that, which I will discuss in a little bit. But it's purely based on quantitative trading like momentum, mean reversion, by using our AI and machine learning models. So let me go in a bit more details on how you can actually use the TM grade. So like I said, here on our ratings page, you can see all the grades of all our tokens. And from our backtests, like I said, usually a grade above 75 or 80 should be a bullish sign, and a grade below 40 should be a bearish sign. So what we actually went up and did at Token Metrics is we backtested this very simple strategy. When a coin has a TM grade above 80, I want to buy signal. And when a coin gets a TM grade below 40, I want to sell signal. So this is the performance of these type of strategies. Very simple: buy when grade above 80, sell when grade below 40. And these would be the signals that you would get on Bitcoin, for example. So as you can see, it was pretty helpful. Of course, you're going to get some false signals like this bullish signal and this bearish signal, but overall, the savings you make by following this type of risk management strategy is extremely useful. As you can see in the first local top of the market in April, May, you would have sold Bitcoin at 50K and then bought back at around 37. So that would have been very good. And also very recently, our bearish signal came in at 60K for Bitcoin. So we were able to save up more than around a 50% drawdown. You will be able to remove that 50% drawdown just by following the TM grade. Other examples, here is BNB, very, very good performance based on TM grades. You see here the first bullish signal was very early on at below $50 and a bearish signal at around 555 here, which would have helped you skip also a 50% drawdown. And more recently, in the past, I think 4 or 5 days, we got a bullish signal, and here we had a bearish signal as well. Another quick example is Solana, where most recently we had a bearish signal at around $200, and the most recent bullish signal was around 100. VeChain as well, very, very good performances. We were able to catch huge rallies and then exit big drawdowns. Now, of course, no model is going to be perfect. We're not going to be selling the top right here, but as a risk management tool is extremely good to follow the TM grade based on our tests. All right, so now that I explained how the TM grade works visually and how you can use it to just day trade specific coins that you like, let me go ahead and explain another very important feature that we built at Token Metrics, which is the Token Metrics Indices. So a very big challenge in crypto is to say, okay, what coins should I buy right now? How should I construct my portfolio as of today? Which coins should I buy? Which coins should I sell? And how much allocation for this coin and so on. So at Token Metrics, we wanted to give all of our customers all these quantitative funds, all the models that quantitative funds use to allocate assets, to buy and sell, and good timing. So what we did is we built custom-made portfolios here, where we give the option for our customers to choose what time horizon they want their portfolio to be updated. For example, here I'm on the daily, which means that every day this portfolio will be updated to show which are the best 5 coins to hold today. So as of this morning, these were the best 5 coins based on our model that we should hold, with Solana having the biggest allocation at 30%. And then you can choose if you want to rebalance once a week or if you want to rebalance once a month. Another feature we have, which is also helpful for our customers, is sometimes we have customers that only want to trade low cap coins because they believe they want to take big risks. Obviously, investing in low caps is more risky than high caps. So we give this option for our customers. They can say, okay, show me a portfolio of only low cap coins. And the best part is, like I mentioned before, if you only have access to one exchange or 2 exchanges, you can choose on what exchange you want this portfolio to be built, and it will give you coins that are only tradable on this specific exchange with an allocation like this. And of course, we provide all the transaction for full transparency. And here are the performances of the indices since we launched on July 1st. And in addition, we provide the cumulative return of our index compared to the benchmark Bitcoin. So here Bitcoin is in white compared to the performance of our index in yellow since July 1st. Other than that, we also provide day by day what was the performance of these indices, and at the end, a table of statistics. For example, here, the all exchange, which looks at all the coins we have in our system, has made a 7.67x since July, with a very minimal drawdown compared to other type of strategies or other coins. If you were holding this specific strategy, only had a drawdown of 32%, which is extremely good for crypto, and a Sharpe ratio of 3.8, which is also very, very good. And we provide all the transactions, like I mentioned, to make it easier for you to replicate this portfolio on your specific exchange. So now that I explained the indices on our website, here is the performance of all of our exchanges, exchange-based indices. Here I'm looking at the daily high cap indices, and as you can see from our website here, Gate.io had very good performance. KuCoin had extremely good. All Exchange, FTX, Gemini, and a lot of indices performed extremely well. As you can see here, the best one has been Gate.io with a very, very strong return. And here in the red dashed line is Bitcoin, which is our benchmark. So as you can see, only two of our indices underperform Bitcoin compared to the rest that outperform Bitcoin by a lot. And if you want to look at more recently, how was the performance of our indices? Here I'm showing over the past 7 days how our weekly indices performed. So as you can see, pretty good performances over the past week. The best one was across all the different exchanges. Uniswap had a good performance, Coinbase as well, Gate.io as well. Only PancakeSwap didn't perform well, had a negative weekly return. So one thing I want to mention and explain is how we are building these indices. So like I said, like I explained, we have our TM grade, which is working great. So we wanted to use that TM grade as an input to our portfolio construction model. So our portfolios are taking into account the TM grades and are building a diversified portfolio to hold based on your time horizon. So essentially, this plot is a good visual that explains how it works. So here is, again, Solana's price chart, price in red, TM grade in blue, and all these green lines are when this coin was part of the Token Metrics Indices, when our portfolios said, okay, let me buy Solana. So as you can see, the entire early run-up of Solana from around $30 all the way up to around $180, this coin was being picked by our portfolios every day. So we held it from $30 all the way to 180, or so sold it at 180. So that shows how the portfolios are able to pick winning coins based on TM grade. As well as most recently, for the past 7 to 10 days, Solana has been being picked every single day in our indices. The first time got picked recently was at $100, and now it's around $125. Another example of more of a low cap coin, which is Maple. Same story here. It's being picked consistently in our indices every day, actually, since March 15, where it was trading around $25. All right, so this is the Token Metrics Indices feature, which help you and every customer to build portfolios. Just replicate every day. You can sign in, see, okay, what is the new portfolio that I should be replicating, and then you can go on your exchange and replicate very easily. Now, if you want to learn more about specific tokens, you can search any token you want here on our platform, and you would go to their page where we have TradingView integrated on our website. So if you want to do some technical analysis, you want to see some technical indicators or draw lines and trend lines, you can do it on our website immediately. And then you can also see daily, weekly, monthly TM grades. And then we can also show you which exchange this coin is trading on. We also show a technical analysis tab where we have built our own trend following signals where you can just log into that coin and see exactly when our model is going bullish or bearish. This is Binance, for example. And yeah, so you get all these signals on Binance. And the nice thing is that you can also, we also show you the backtest of following these signals to the letter. So since December 2018, we had 10 trades on Binance following our strategy. Here, the strategy is in yellow compared to holding in blue. So if you held BNB since 2018, you would have made 4,000%. But if you followed the low frequency trend indicator, you would have made 15,000%. And the accuracy of the signals were 70%. So that was pretty good. And we also minimized drawdown, which is pretty important. And then other than that, you can also see some fundamental aspect of this coin that our research team goes through, as well as technology part, which goes through the GitHub of this project and rates their GitHub. Another important feature is the correlation, where if you already have BNB and you want to diversify your portfolio, you can see, okay, which coins have a negative correlation with that coin, so to help me diversify. And here is how these signals that I just showed on the website, they're exactly the same, but on my Python notebook, because it's clearer to see. So these would be the signals on BNB, for example. Here's the COVID crash, and then all the rest of signals. So 10 signals here, and this would be the back test where the ROI of the strategy is extremely better than the ROI of holding, and accuracy of trade is pretty good. Another example is Cardano, which recently had a bullish signal, and here had a bearish signal at around $2. So that helps you manage risk and trade much better than just holding. And last but not least, since our TM grades have been working extremely well, we developed a market indicator. So an indicator based on the TM grades for the entire market as a whole. So this chart here shows the total crypto market cap, where we apply our TM grade signals. So as you can see, first of all, you can see that there are some false signals, but they get corrected very fast. So the losses are usually very minimal, like here or here. But the big trades are the most important ones. For example, here at around 2.4 trillion is when our market indicator went bearish, showing that we are in a bearish regime in the crypto market. And it actually did follow this huge drawdown. Then we got back a bullish signal here. And most recently, in mid-November, we got the most recent bearish signal at 2.75 trillion. So at that point, we were saying, okay, we are in a bearish regime. And the past 10 days, we got our bullish signal at $2 trillion. Now, I want to also say that since November, we've had a very big drawdown in the entire market. So how did the TM indices perform during this bearish regime? Well, it did perform extremely well. What I did here is I just took the signals on the entire market and I plotted them on the return of our all exchange daily index. So here's the cumulative ROI of our all exchange index, which is this one essentially. And in red is when the market was in a bearish regime. So as you can see, even when the market was in a bearish regime, our indices performed very well, outperformed the market as a whole, and mainly due to allocations to coins like Pax Gold, Tether Gold, we've been seeing a lot, also some stable coins to hedge market downturns, as well as coins that were being flagged by the TM grade, like Zcash, Mirror Protocol at some point, Origin Protocol as well, and Waves and that. So I hope this explains a bit. I hope you enjoyed the tour of our website, and that's it for me. And back to you, Nancy.
Okay, thank you, Jad. So for those of you that are just tuning in, we are talking about how to build a crypto portfolio. And for the next 24 hours, we are offering a 40% discount on any Token Metrics plan. Just use the code GOTM40. So our next guest is Mehdi Farouk. Mehdi is the Director of Research and he is also the host of TMTV's 100X show, as well as Crypto Deep Dive. And Mehdi is here to talk about long-term allocations. Welcome, Mehdi.
Thank you, Nancy, and thank you, Jad. I'll just kick off things slightly informally. So our machine picked up Solana 1 week ago. So one of the reasons, one of the things at Token Metrics is that you have your AI and machine learning models, but you have human analysts that are sector specialists. So my specialty is infrastructure Web3 L1s. So I look into L1s, and Solana is also one of those things, one of those L1s I was very bullish on. So over here, this person said my top 3 worst investments so far included Solana, but at Token Metrics, you also have this flavor of human analysts that give you long-term thesis to allow you long-term compounding of your portfolio. So Solana is also one of the picks that that can do really well for your portfolio. And this is the thesis, right? You have a L1, which is strongly composable. So Ethereum is composable blockchain, but their 2.0 roadmap is something which might not be composable. And you can see the ecosystem of Solana is basically on a tear. And it's the only blockchain at the moment which is non-EVM. Apart from Polkadot, it's the only other major chain that is non-EVM. So when you have a non-EVM chain, you have a native ecosystem, less fragmentation, liquidity, and because of that, a lot of people in the long term will migrate towards Solana. So that was just one of the touches that Jad mentioned. We at Token Metrics, as human analysts, can give you more flavor, more education of why some of the things a machine are picking might be long-term holds. That being said, so the title of my presentation starts with this thing. Start with this quote: "Winner keeps on winning." So if you have been investors in some of the US tech stocks, such as Apple, you would have made extraordinary money. And for long period of times, Apple stock compounded. Same with Amazon stock; it just compounded over the long period of time in double digits. Same with Microsoft. Same with Facebook. We saw kind of like a dip here, but all in all, it just kept on compounding. And same with Google. And if you just invest in $1 at inception, these will be the returns you would have made, which is again extraordinary. And this is in the percentage terms. Again, very, very amazing returns. So why am I showing you this? I'm showing you this because the next generation of internet stocks will come in Web3. And we are already seeing some signs of that. So infrastructure, Web3 infrastructure layer 1 is the place to be. So I'm just showing you some performance of some of the layer 1s, just exclude Bitcoin here: Ethereum, Binance, Solana, Dot, AVAX, Algorand, Atom, and Phantom. Over the period of 1 year, I'm just taking a period of 2020, end of 2020 to end of 2021. ETH basically did 5x, BNB did 18x, Solana did a crazy, I can't even do the maths here, from 70 million market cap to 53 billion over here. So you're kind of seeing the trend of this huge compounding happening in layer 1, and there's a reason for that. So if you are assuming, just like myself, if you believe Web3 will take over Web2, there's a reason why Web3 infrastructure could become the next FANG stock. So in our web world, majority of the value that was captured was through application. So internet provided as the protocol, and on top of protocol, you have these aggregators such as Google and Facebook that gather data and use that data to monetize users. And so a lot of money was made and compounded over the period of time because these applications captured a lot of value. But in blockchain, it's the opposite, which is a lot of things, which is sometimes something that investors from traditional world cannot comprehend, and they get confused with regards to valuation. So in blockchain, when you have infrastructure, or layer 1 specifically, but infrastructure, that's where majority of the value is captured. So I cover infrastructure, and I can tell you majority of the value is captured through that. And I'll show you through visuals why infrastructure, Web3 infrastructure for long-term portfolio allocation is the place to be and should warrant a very high allocation of your portfolio. So as you can see over here, In the future, you will have games building on blockchain because it's decentralized. Users can own the platform itself. So you'll have games, you'll have social network, you'll have marketplaces, you have IoT, things like Helium, you'll have exchanges, lending, borrowing, you name it. But underneath all of this killer application, you have the whole stack, which I call Web3 infrastructure. And this stack is basically needed to provide you decentralization and the element of the fact that you cannot be deplatformed, like in the case of Amazon or in the case of Google. So if your application becomes more popular than the market capitalization of Google, I'm sure Google will not allow that. You'll get deplatformed. So similar is the case over here in Web3. Because of the decentralization narrative, and this is what we want, majority of the application is built on top of the stack, but through gas fees, through these layers of infrastructure, majority of the value is captured. So the way I kind of see my portfolio and the way kind of I advise, if you want to have index level exposure of the whole crypto sector, these are the places you can capture a lot more value. So this makes me come to the next slide, which is how do you allocate your crypto portfolio? So I'm going to argue majority of your allocation, 60 to 70%, should be in Web3 infrastructure, and then rest on these killer applications that might come in the future. So at Token Metrics, we help you identify the next infrastructure and so on and so forth. So I'll give you, for example. So we recently did a deep dive on Avalanche. It was a thorough deep dive. We covered everything on why this is the infrastructure project to own long term. We also did on-chain metrics. We did multiple on-chain metrics. We also did valuation from different angles and showed you the investors, partnerships, highlighted you the risk, and also the TA. So comprehensively told you why Avalanche is good. And then we don't stop here, right? So if you don't like reports, we also have 30, 40 minutes video deep dive. And then we also got the founder of Avalanche on our podcast show and asked some of the questions our community members had. And we have been doing this for a long time now. And this was the reason why, that was the reason of our success in terms of identification of projects like Matic, which is also an infrastructure project, and Helium, which is a hybrid of infrastructure / IoT. And we identified Helium pretty early as well. So we identified Helium on June 18, 2018, and made our customer a lot of money. So the aim is to help you make money through AI, as well as human analysts that are sector specialists to give you direction. Coming back to the portfolio allocation, given the role in Web3 infrastructure plays critically in terms of decentralization and ownership structure of the way the world will be in coming years, it makes sense, according to me, to have a 70% allocation. So the way I would allocate Web3 infrastructure would be, let's say out of that 70%, 40% of my allocation would be on Ethereum, 10% to Cosmos, 10% to Avalanche, 10% to Solana, 10% to Near, 7.5% to Cosmos, Luna, and Arwave. So those who are patient with me, you can potentially use this as an allocation or a guiding star to kind of make your first Web3 infrastructure portfolio. Also, since you have been very patient with us, there is also some alpha leak for you guys. So in the future, these are some of the projects that we are looking into. So these are not publicly listed yet, but in the future, in let's say 1 year to 1.5 years, these projects will be listed in the market, and we have already analyzed it for you. So once they are launched, we can provide you evaluation and analysis whether you should buy these projects or not. But at the moment, given the potential and innovation these projects are doing, I think these are very good projects for long run. So Celestia is trying to make Ethereum 2.0. Layer 0 is trying to make a protocol that will allow cross-chain communication between different blockchains, such as Ethereum to Polkadot to Solana. Ceramic is trying to make a database layer 1 where users can own their data, and next social media and DAO-based application will be made, and this data will be composable, so you can do lending, borrowing of data, and build things on top of data, unlike Web 2 where you have gated access via APIs. In this case of Ceramic, you'll have open nested structure. Aptos is again similar to Solana, And this is built by the team from Facebook, LibraDM, that were making that blockchain. Now they're making their own blockchain. So these are 4 projects for the future we are bullish on. Just to summarize, why we said 70% of your portfolio should be Web3 infrastructure. Reason number 1, Web3 infrastructure is the foundation layer for decentralization, ownership economy, and automation. With smart contract, we can automate things. Second reason, layer 1 smart contract protocols and infrastructure allow app store, similar to app stores. You can have DeFi, gaming, NFT applications built on top of it. They provide you a catch-all solution for betting on the overall growth of the digital assets. And finally, you can also think of Web3 infrastructure as like nation state, as economies, as countries, where application building on top of them rely on them for medium of exchange, rules, security, and culture. So one of the ways you can think about a Web3 infrastructure is to think of them as national economies rather than equity in application. And because of that, this will accrue a lot more value, maybe in trillions in 10 years' time. Now, one of the concerns you will have is, why didn't I allocate 100% to Web3 infrastructure since I sound so bullish? But you also have to be cognizant that, let's say, if you combine the market cap of all the stores in Amazon on their marketplace, their capitalization is more than Amazon. All the market cap of all the apps on iOS, their market capture is more than Apple. And thus, it stands to reason that collective size of all the apps on blockchain will actually be bigger than layer 1. So you need some diversification. And it's also fun to identify the next killer app, right? So next Instagram, next WhatsApp, next TikTok, next Tinder, next Bumble, what have you. So hence 70% allocation makes sense, but then you also need some allocation in your portfolio where you're trying to identify the next killer app. Hope this makes sense, and hope you subscribe to Token Metrics if you haven't, and we'll give you all of these reports that we produce, and podcast shows and individual analysts to kind of answer all your questions.
Okay, thank you, Mehdi. And so to pick up where Mehdi left off, we're going to talk about DeFi. And here we will hear from Dennis Miller. He's our senior investment analyst, and he's also going to be a host of a new TMTV show called Hidden Gems DeFi Edition. So welcome, Dennis.
Nancy. Hi, everyone. Really excited to be here and to talk to you guys about DeFi. So I am going to share my screen quickly. And so what I want to do is just kind of start from the very beginning, because I think that it makes sense to make sure that everyone's on the same page and that we're all kind of understanding what DeFi even is, you know? So let me just kind of break it down. So to understand kind of what decentralized finance is, we have to think about what the traditional financial system is that we've been operating within. And that system is really defined by central agencies that we have to go through, right? So when you want to interact with your money, you have to go through your bank. When you want to interact with your investable assets, your derivatives, you have to go through a broker and that medium of exchange. And what DeFi and the blockchain have done is to remove those barriers and gated systems and allow us to interact with each other directly. And this opens up a world of possibilities. Instead of if you have extra money, you want to lend it, instead of you having to go to your bank and saying, what's the rate? And the bank says 0.2% per year, take it or leave it. You know, you can go to a decentralized marketplace and kind of see what people as a whole have to offer, and you'll get a much better rate. And that's just kind of the incredible opportunities that we're seeing in the space that couldn't exist before, by taking out a lot of the intermediaries and by facilitating transactions between each other. So that's the building blocks of DeFi. To kind of continue with a little bit of a history lesson, if we look at kind of DeFi total value locked over time, or TVL, this is kind of the key metric that we use to gauge how much money is in DeFi. And you can kind of see back in May, you know, this was pretty much a flat line from where we are now, but in May of 2020, DeFi finally hit 1 billion in TVL. And around that time is when innovation really kicked off. Lots of new projects were coming on board. And from there, from May 2020 to the end of the year, TVL went from 1 billion to 20 billion, right? It just kind of exploded as people came to the space. And then just if you keep following that through, from the beginning of 2021 to now, we saw another more than 10 times growth, up to 250 billion in TVL nowadays. And the money, is clearly flowing in because there's so much activity, there's so much to do. But just to kind of even frame this further, the like traditional financial sector right now is somewhere in the ballpark of 23 trillion, which puts all of this great growth still at about 1% of how much money is in traditional finance. And another kind of thing to just leave you with to think about is that something around 30% of the world has been unbanked, just has not had access to banking services. And just another exciting thing that the blockchain does for everybody, as from an infrastructure point of view, is to give access to banking services. And DeFi will kind of be a direct recipient of that, as the only barrier to entry is a phone to connect to the DeFi infrastructure with. So if you're kind of following this through and you're saying, okay, great, there's $250 billion in TVL, what does that look like? Where is that money going? Then I give you this, which is just this giant map of ecosystems and projects that have expanded and blown up kind of in the DeFi space. And when people were able to connect with each other without the need of going through a bank, people got creative and said, well, what services should I build? What services do we need to connect with each other to do interesting and new things with our money? And all of these kind of different brackets were built out over time. If you have one crypto, you want to swap it for another crypto, you go to an exchange. If you want to buy some kind of derivative product, there's tons of different ones that all kind of cater to different functionalities. And this ecosystem has kind of bloomed over time and is growing every day. And I think this is kind of where we as analysts and as Token Metrics as a company come in, is to help you navigate this, right? There's so much to look at, there's so much to see. How do you navigate this? And what we do is every day we are looking at the space, and then at every week or so, we'll condense down all of the new things, all of the findings into videos, into email reports that you'll get. And by being able to read through that, my goal as an analyst is to bring education to you, bring interesting ideas to you in the space, and also maybe highlight some cool projects that let you do interesting things with your money. I mean, the whole point is to find new ways to interact with your assets. And that's kind of what the heart of DeFi is. And just kind of in the past, we've had some great calls just as a team. Looking at these percents on the left, these 3 projects that I kind of boxed out in red from when we talked about these names to in our newsletters. If you just held that all the way up until today, it's plus or minus because everything fluctuates, but these are roughly the returns that these projects have done in the past. And you might notice, well, Phantom isn't even on this chart. What's up with that? And that's because this chart is just the DeFi ecosystem on Ethereum. And every layer 1 blockchain that kind of Mehdi was alluding to, they have their own DeFi building blocks and ecosystems. And once again, we are just kind of here to help you navigate and learn about all of the different ones to follow through and to kind of guide your journey in the space. So these are the kind of the core things that I wanted to talk to you about. And I just wanted to give you a bit of a glimpse at what these kind of reports look like. And yeah, there's been a ton of really interesting projects in different themes. One of the recent themes that we've really enjoyed was some names that you guys could look at on your own if you're interested, is something like Shade and Lido and Goldfinch. All of these interact with DeFi in very interesting ways. And here's some other more recent ones from one of our recent reports, where just to kind of give you guys a quick idea of what these look like, we go through a name, we score it, we talk about what the project is generally, why we like it, if it kind of fits into a greater thesis within the DeFi space, and then just if there's kind of notable investors that are already involved, what the team looks like and how the team fits into the project. And then if the token is already out and it has utility, we highlight what the token can do for somebody that holds it. And then finally, once again, if the project's already out, then we kind of mention where you can go to actually pick up the token. So these reports just come straight to your inbox, and they give you something to learn about, something to read, and something to potentially research further if you're looking to make investments in the DeFi space. And Mehdi was kind of alluding to this, but I think we found it reasonable to allocate roughly 10% of your portfolio to DeFi. And I hope you enjoyed that quick overview of the space, and I hope to interact with you guys in the future. Thank you so much.
Okay, thank you very much, Dennis. So our next speaker is Chase Allred. Chase is a market analyst with our research team, and he is also co-host of TMTV's NFT Gems. So welcome, Chase.
Thank you, Nancy. Thank you, everyone, for joining. Today, I'm going to give you guys a quick overview on NFTs. Can we see my screen?
Yes, we can.
Fantastic. Okay, so NFTs, I like to consider them a digital receipt of a unique good. So something where it has some sort of unique identifier. The common example we use in the physical world is a baseball card, because all baseball cards have their own specific conditions, players, etc. NFTs are metadata of an asset added to the blockchain. The common misconception here is it has to be a digital asset, like a JPEG image of a monkey or an ape or a penguin, whatever that may be. In fact, this metadata can be your receipt of a purchase of a physical good. It could be a ticket to a concert. The deed to your house could be an NFT on the blockchain, and I would bet that one day it will be. In addition to that, it could be any of these virtual things that we see, like JPG images or GIFs, what have you. Two interesting properties that I want to talk about of NFTs are the ability that you have to own the intellectual property underlying your art or underlying your NFT. So you have to do some research on these projects, but certain projects will allow you to actually own the intellectual property underlying the NFT. For example, Bored Ape Yacht Club was one of the first projects to actually give their owners the IP of their art. What this means is a Bored Ape owner can shop around their NFT, their image of their ape, and they could put it in a YouTube ad, a TV commercial, a movie, and they receive the royalties for that, as opposed to the developer Yuga Labs receiving the royalty. Yuga Labs sees this as brand promotion, but they don't actually have anything to do with your specific NFT. Recently, they acquired the intellectual property to CryptoPunks, one of the first NFT collections there is, and they actually gave the IP back to the holders, so they now have this added utility as well. Second thing I want to talk about is the secondary market royalties. So if I'm an artist today, I have to go sell my art at Sotheby's, and I get one lump sum payment for my art, and that's all I get forever. If I'm making my art as an NFT, I can program into the smart contract, I want 5% of the purchase every single time this is sold. So in theory, I could be making money off this piece of art that I made yesterday forever, or my descendants could be making money off of that. So obviously that's a huge reason why we've gotten a lot of big artists to come into the space. Takashi Murakami is a very famous contemporary artist. He'll be releasing a collection where he gets 7.5% royalties on each NFT sold forever, which is something really interesting and something that I feel like is very important to growing the community within the NFT space. So as far as finding NFTs, what we do at Token Metrics, we are always looking for those undervalued blue chips. And how we think of blue chips is we think of projects that will be in the NFT museum in 10, 15, 20, 50 years down the road. The projects that will make it into this museum are the ones that were the first. They innovated, they were trailblazing in some way. So for example, Bored Ape Yacht Club, they were the first NFTs to really engage with and market to their community. Autoglyphs is the first on-chain generative NFT. The Axie Infinity Axie is the first mega popular gaming asset. The Squiggle, which you see in the bottom right here, is the first generative art to be sold at Sotheby's. These things go for millions of dollars. And when it comes to actually investing in NFTs, we have the NFT stack here. So you have to pick where on the stack you want to invest. Around here, we have the actual applications. This is where you see your projects, your profile pictures, your collectibles. Up here, we have the marketplaces and the front ends, the interfaces. So Audius is a decentralized music streaming platform where you can also have access to NFTs, all the way down to the layer ones, the Ethereums, the Flows, the Solanas. When it comes to investing in NFTs, it is important to pick a strategy and stick to that strategy, whether you want to just buy blue chips to hold for the long term, or you want to quickly mint and sell for JPEGs for a very quick profit. We call that flipping JPEGs. You could invest in the infrastructure. So you could buy the Flow token of Dapper Labs, who built NBA Top Shot and CryptoKitties, or you could invest in actual NFTs like Virtual Land or Axies or Bored Apes. You could become very diversified throughout this sector, throughout all these sectors, and invest in aggregators and financialization NFTs, as well as verticals, layer twos, or you could become an expert in one of these sectors, say the financialization sector. I know Dennis has done some work in the NFT financialization sector. It's really interesting. But at Token Metrics, we try to cover all of this. Particularly, I look at the projects themselves, but Mehdi is also covering infrastructure. Dennis is covering financialization. Mike's got the gaming thing on lock. Just to give you guys an example of some of the things we send out, this is our NFT cheat sheet. So this was sent out last week, I believe. Yep. And it features some of the top both minted and pre-mint projects. So if you want to go in, ideally, the mint price is the cheapest you will ever get an NFT. So we try to find these NFTs before they have even minted. That way you can get on the whitelist, you can get in the Discord and become an active member of the community. We like to talk about the team here, which sometimes they are anonymous. We talk about the utility of holding the NFT. Is it going to earn you yield on some type of token? Will you get access to an in-person event? You might get a physical merch drop. All of these things are very common in the NFT space. And then we also like to look at the social media metrics, because community is very important in NFTs, and Bored Ape displays that better than anyone, I would say. As well as the projected mint date, mint price, items in the collection, and the status of the whitelist. Is it closed? Have they filled all the spots, or is it open? For the NFTs that have already minted, we're able to give them an actual score based on these metrics: community, team, utility, innovation, smart money wallets, Twitter, distribution allocation, and liquidity. So Murray by Haas scoring an 82%. That's a very solid project. We don't see a ton of projects go above 80. Next, we have our NFT Hidden Gem show, which you can find by subscribing to the Token Metrics YouTube channel. I really recommend you guys check that out. My co-host Jacob and I put a lot of work into that every week, so I'd love it if you guys checked it out. The last thing I'll say before passing it off to Mike is NFTs are one of the most speculative asset classes that exist. I would not financial advice, but personally, I would not put more than about 10% of my total portfolio into NFTs. However, I am a firm believer in the technology and will take that risk for the potential upside exposure. Thank you all for listening.
Okay. Thank you, Chase. So who's ready to hear from our gaming and metaverse expert? Mike Hilton is an investment analyst with our research team, and he's also the host of TMTV's Hidden Gems. Welcome, Mike.
Hey, everyone. Thanks, Nancy, for that introduction. Just going to go ahead and walk you guys through what I'm specializing in here at Token Metrics. I'm a gaming and metaverse sector analyst, and what I'm looking at is potential games that can make our customers money. So I just want to walk you guys through the gaming and metaverse sector so far. This is just an illustration of the biggest project that has incorporated play-to-earn models. Axie Infinity. So far, it has $3.6 billion traded within its network, and an NFT worth $820,000, and almost 3 million daily active players. So what decentralized gaming is doing for gaming in general and gamers alike is the fact that it's creating a more decentralized framework for builders to build on and gameplay to be developed on as well. So open source tools are being leveraged by these projects to allow gaming developers to create more dynamic games which are composable and have more vibrant social economies. And by doing so, gameplay has transformed for players where they can now, enjoy these play-to-earn models and create a more sustainable, side income for themselves. A lot of people in, third world countries are utilizing play-to-earn models to make side incomes besides their day jobs, to sustain themselves in other manners. And, this is all done through the fine-tuning of game theory and tokenomics, which are, employed in these games. So, utilizing NFTs and the infrastructure that's built out on the infrastructure layer, games and developers have been now able to open source these games and allow other developers to build on top of, and allow users to earn additional income on the side as well. So NFTs have also paved the way for this to happen by allowing people to own a piece of these decentralized games. And by doing so, this industry, has been rapidly advancing. We could see here in this illustration here, this is the current, balance in the past 30 days of some of these play-to-earn games. We could see, close to $6 billion generated across these 7 games here, and the industry as a whole is expected to reach, $200 billion by the end of this year. So these are some really exciting statistics that we're looking at, and we're hoping to curate, the best projects to our customers in hopes of, capturing some of this alpha. So 85% of all respondents that, have played games in the past agree that true ownership of digital goods is important, and this is something that blockchain-based gaming is providing to the industry. Some important picks that we found here at Token Metrics, they spread across various sectors. There's Ethereum-based gaming. There's a lot of infrastructure level projects that are creating these games, but some notable picks we found are Immutable X, DeFi Kingdoms, Synomium Space Cubes. These are all play-to-earn projects or infrastructure level projects that have provided our customers more than 600% ROI. And in reference to portfolio allocation, we do recommend to allocate less than 10% of your portfolio to gaming and metaverse as the industry is still growing. But again, projections for 2022 is the fact that this industry is projected to hit close to $200 billion. And in the last 30 days, as this illustration shows you, some of these protocols have generated close to $4 billion alone. So definitely a very exciting field to be a part of. And here at Token Metrics, we can help you guys, find and traverse your way through it by finding the best picks, via our newsletter and our Token Metrics YouTube channel, which also showcases, the top hidden gems within this sector every week. Thank you all for tuning in.
Okay, thank you, Mike. And so it's time for our last segment, the Q&A, and we have 2 in-house experts here to answer your questions. We have with us Ian Bellina, the founder and CEO of Token Metrics. He is also the host of TMTV's Moon Mission. And we also have Bill Noble, who is our senior market analyst, and he is the host of TMTV's Market Update. Welcome, Ian. Welcome, Bill.
Hi, thank you.
Okay, so let's get to our very first question. And apologies, folks, for running over. Just bear with us. I think we can get through these in hopefully the next 10 minutes or so. So our first question, with so many exciting projects out there, I find it difficult to decide which ones to back and which ones not to back. What is your advice?
Great question. That's why we built Token Metrics. So I would say, one, reference great projects our research team covers, projects that have scored over an 80% on fundamentals, on code reviews, and then leverage Token Metrics, the platform, for your entry. For example, if a project scores an 85 on fundamentals and an 85 on code review, then go to the platform and see what the TM grade is. If the TM grade is over 80 on the daily, that means it's a good time to enter that project. Right? So I would use that as a filter process to filter down the list to projects that actually make sense to enter at the current market climate.
Okay, thanks, Ian. Next question, for your average investor, what is the optimum number of projects to invest in?
All right, I'll try that one.
Go ahead, Bill.
Okay, thanks, Bill.
Okay, so I'll give you a quick answer, right? It's projects that you understand, okay? So if you understand 3 projects, then that's the answer, all right? Now, on a more complex level, right, you want to have, say, Bitcoin, so you can understand how and why Bitcoin moves, whether you're new to crypto or whether you've been around for a while. And you want to have Ethereum, so you can watch how Ethereum, the currency of culture, moves versus Bitcoin, which is like digital gold or very sound money. Now, Ethereum is used for other things like decentralized finance. All right. So you want to see how one moves versus the other. That way you'll be able to understand the entire crypto market much faster than you think. Now, what is coin number 3? Coin number 3 is, a speculative coin of your choice. It can be a large coin like Solana that's similar to Ethereum, or it can be a smaller coin that you would get from one of our analysts or from, of course, tokenmetrics.com. Now, once you understand how, say, your small coin or your speculative asset, or for anybody who's into stocks, your small cap stocks, perform versus the bigger cryptos, right? Once that goes, okay, yeah, I get that now. And if you've made a little money in the process, okay, then you can start moving out to, say, the type of portfolios or suggested allocations that we have on the site, which is like anywhere from 5 to 10 coins, right? The asset allocation for me is psychological. What do you understand? And do you understand what you have and how it moves?
So to add on to that, I view this from a different approach, similar to what Mehdi mentioned earlier. I would view this from a sector-based approach, right? So in terms of having full diversification, for the first time now in crypto, we have different asset classes inside of crypto. So similar to equities, how you have stocks, you have real estate, you have art, you have commodities. Now in crypto, we have the same exact asset classes with digital. So in terms of building a portfolio, I would look at, one, having Web3 in there, having DeFi, having NFT, and NFTs in there, having gaming in there. And then in each sector, I would have the blue chip, the incumbent, the one that is already leading that space. And then 2, having a hedge versus that incumbent. Right? So for example, when it comes to Web3 and layer 1s, Ethereum would be that, right? My hedge for Ethereum is Avalanche. If Ethereum ever does not fulfill its ETH 2.0 timeline, I think a hedge for that is either Solana or Avalanche. And then I would also have a moonshot in that sector, meaning that not quite there versus Avalanche and Ethereum, but this is a potential 100x or even 1000x return investment. This is probably an early stage token, probably hasn't even launched yet. Right? So basically, if you go through every single sector, take DeFi, for example, you take the incumbent. It could be Aave, could be Uniswap, could be SushiSwap. Then you take a hedge versus that. Then you take a moonshot. A moonshot is probably going to be an IDL, something that's recently launched in the last 6 months that has a market cap under 100 million. So I'll do this across all sectors, which would probably give you somewhere around 15 coins.
Okay. All right. Thank you, Bill and Ian. Moving on, what are the different strategies for a long-term versus a short-term portfolio?
Different mindsets, right? Short-term, you're trading, you're looking to get in and out. You don't really care about the fundamentals. You're basically caring about the momentum of the market. While long-term, it's the exact opposite. When I think long-term, I try to find value. I view myself as a value investor, meaning I find projects that are undervalued. So by definition, you have to find something where you think the market is mispricing it in terms of where it will be in the future. And that's a typical long-term time horizon. So for example, one way to view long-term investing is not by months, years, or quarters, but ask yourself, if we go through a bear market and we bounce back, will this project be one of the blue chips that bounces back? Because historically speaking, in a bear market, by definition, over 90% of crypto assets drop 90%. Even Bitcoin and Ethereum. Bitcoin dropped 85%, I believe, in the last bear market. Ethereum dropped 90%. Didn't matter if they had great fundamentals or great technology, they still dropped. But what matters is in the next bull market, in the next market cycle, will they bounce back? Right? Because if you go to the last bull market, there were products that did 100x, such as Icon. And even to this day, despite this new bull market, Icon still has not hit its all-time high. It is still down, I think, about 80% from all-time high, meaning that the market has this shiny new crypto token syndrome, right? So as new crypto assets are entering the market, will this asset you have in your portfolio weather the storm? And that's a very tough question. And typically to weather the storm, they have to be very innovative, meaning that they'll stand the test of time as new competitors enter the market. And they have to have actual utility to incentivize people to hold the token. Bill, anything to add?
Yes, I think for short-term strategies, all right, that's going to be like a higher risk tolerance, right? So if you want to be in April and out in May, all right, believe it or not, that's for people who want to take, I think, a lot of risk, right? Because you have to pay attention to that. You have to have tools. You have to spend, you have to spend a lot of time studying. And I think the people who put that time in are the people who want more risk because they want more reward. Now, the long-term investing strategies, right, where people will just say, I'm going to put an amount of money in, and literally, if I lose it all, I don't care. But as this asset goes down, I'm going to constantly accumulate, like dollar cost averaging in equities. So I think people who watch the market short-term need to just do just that. They need to watch it all the time. Long-term players accumulate, ignore the noise, okay, because they have confidence in what they're doing and they can sleep at night, okay? So if your position is big, right, and you're worried, you might not be a long-term investor. So that's something to consider in crypto.
Okay, thank you, Bill. Next question. What is a good profit-taking strategy for a hodler versus a crypto swing trader?
All right, I think with swing traders, that's going to be somebody who, looks for total despair at bottoms, right? Frequently when people give up or get very bearish, that could be an opportunity to enter. Why? Well, because once everyone is done selling, right, the next buyer that comes in, well, there's no supply for them. So they have to bid the market back up, just the same way at the top, right? At the top, when, you're thinking about, having a party, or you're looking and you're shopping online as you're watching your crypto portfolio, that would be a time to exit if you have a sort of swing trader mentality. Now, I'm being facetious with the example. Frequently, swing traders are actually like, highly sophisticated people when it comes to, the short-term analytics of the market, technical analysis. That's my game. Now, a hodler, okay, you have to be careful with this definition, right? As Ian noted, everyone is a hodler until their position goes down a lot. Then they go, oh no. Someone who's a hodler, right, for profit taking is going to take profits during periods of like extreme euphoria, right, where they actually believe that there will be an opportunity to buy some of their position back. But I think the difference is, a short-term swing trader will, buy $10,000 worth of crypto, and then when it gets to the top, it'll sell 10,000. A hodler will have 10,000 in crypto, and when it gets to a euphoric state, person will only sell, say, 5,000. It's always going to have, that person's always going to have a core position. All right. So they never really fully let go of it, right? Which requires two things for hodlers, right? Belief, right? Understanding and conviction, right? You can believe in a project, right? But you've got to have that conviction, which means you're going to stay, good times and bad.
So to add on to that, I'll keep it simple. Buy low, sell high, right? But as Bill mentioned, one other way of looking at it is you want to buy when there's blood in the streets, and you want to sell, as Bill mentioned, when there's euphoria, when people think it's going to the moon and beyond, right? You want to sell during rallies, sell during green candles, take profits during green candles. A strategy could be maybe taking 10 to 20% off with every rally. A rally could be, let's say you have a early stage investment from a private sale or an IDO that does a 5x. I would definitely take some profits off the table, at least my initial investment, and at least probably 10 to 20% more. And then with every 5x or so, taking 10 or 20% off the table during rallies.
Okay, thank you, Bill and Ian. So now for our final question. I'm less than 2 years into my crypto journey. As part of my swing and day trading style, I have 5 to 10,000 for 3 to 5 positions. How do you recommend I use the tools on Token Metrics to manage this short-term portfolio like a pro?
Okay, so with this, I think if you're swing trading, you want to make sure that you're in a trend, okay? So we have a visual trends indicator, or you can just get that feel from looking at the market and your own charts, right? When the TM grades pop above 80, okay, when you're in a trend, okay, your 3 to 5 positions, you will get a good idea of what those will be by looking at the Token Metrics Indices. So in sum, Token Metrics uses AI to grade and filter coins and identify ones that are interesting, right? Based on the AI's read of the price. Then we use the finance math to give you some sort of idea for allocation. So are we in a trend? Yes or no? If we're in a trend, you're glued to your desk. You're really, really focused, right? Because that's when our AI and your trading ability come together, right, to give you the best returns possible. Okay. So as a pro, right, when you're in a trend, you're heavily involved. Now, this is going to sound ironic, but one of the ways to stay sane in markets is not only to use AI, but it's also to manage yourself, right? During the bull market, during the times when things are good, you're aggressive, but you don't have to trade every day. You don't have to look at it every day. You should look at tokenmetrics.com every day, but managing as a swing trader, your emotions and how you can get caught up in crypto is important. That's why using our site matters, right? And the best news I can give for swing traders is the best investment is the one that helps you sleep at night, all right? So you don't have to bet the whole 5 to 10K all at once, right? You can put 5 to 10% in any one coin And as you win, you can add to your positions. All right. So that's how I would answer that question.
Okay.
Very well said, Bill. And to add on to that, I would use the indices, specifically the daily and weekly. So you mentioned having 3 to 5 positions. So the daily indices, all our indices have five holdings in them, right? So for swing trading, I would use the weekly. For day trading, I'll use the daily. The daily have the best returns because they're able to get in and out of the market as needed, and they update whenever there's a crash or a rally. And I would focus specifically on the exchanges that have the best returns. So on the daily, you have Gate.io. Then you also have Crypto.com. Gemini is also doing pretty well. KuCoin as well. I would avoid DeFi exchanges like Uniswap and PancakeSwap. Those haven't fared too well. FTX has done pretty well as well, having over 400% return. But in essence, the daily and weekly would be the go-to on the platform.
Right. And one final note, if you're using the daily indices and you see a coin show up day after day after day, we're almost at the point of nicknaming that the Solana effect, because we saw that when this coin Solana, which is an Ethereum competitor, was at $20, all right, initially, and basically it wind up at 200, right? It was in our indices, the daily indices, day after day after day. So again, that's what when I was talking about your focus in the bull market, Ian was right to point out that that's where the focus goes.
Okay. All right. So before we conclude, and thank you, Bill and Ian, for answering those questions, just want to remind everyone to take advantage of the 40% discount on any Token Metrics plan. You just have to use the code GOTM40. So thank you, everyone, for joining us. We did run a little bit over, so thanks for sticking around. And as we like to say at Token Metrics, the moon is not the limit, to the moon and beyond. Take care, and we'll see you next time.